Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. It's actually for currencies, it's been a choppy start, and for us. And I know if you were listening to the Face webinar this morning, we were talking about the S&P and about the S&P being range bound. Well, the S&P is actually breaking higher now. And we're up at the highs of the session, so we got to think about that right now. The market continues to rally, and I'm seeing some things that make me question the rally a little bit in equities, and let's go over them a little bit. But that doesn't mean that it's going to stop. I'm just saying that have to be a little careful here. Because first and foremost, you have the Aussie, right? So the Aussie came out of its triangle as well, which, it was great. I played it from 32 to 37 or something like that, like this little rally. And then, I got a little nervous as we failed above 40, and that's why I pulled it off. But, we're popping back above there. And the way you have to look at it is it's still bullish. I mean, if we're still above this trend line. So as long as we remain above, let's just call it 69.10, the Aussie remains bullish. But given the fact that the stock market's at its highs and the Aussie isn't, I am a little concerned. Another concern that I have is the dollar Canadian. I picked up some dollar Canadian earlier at 135.66, not too far away from here. And we're in what I think is a consolidation, like a triangle as well. We're consolidating these losses, but the move lower in Europe, you can see the divergent relative strength. So, that got me, trying to buy the dollar Canadian. But I'm, again, being long the dollar Canadian when stocks are moving higher, I just don't know if it's the right trade either. But at the same time, I have to point out that it's not breaking down. You would think that if stocks were moving lower, or higher, that the dollar Canadian would be breaking down. That's not to say it won't, and it may. You can see it's actually starting to show a little bit of a reversal right now. So, then we got that. The euro dollar is, we had this false breakdown right here. And then, I was short. I was actually short, closed it, went long, made a little bit. Then I sold it at 22 when it was at a 618 retracement. And then it just kind of continued to rip higher. And then I sold it again up here in the 70s, and then, wrote it down a little bit. It's been, again, this has been like pretty choppy markets as far as I'm concerned. The currency markets are really just kind of chopping around in ranges as the stock market is trying to break out. So I'm, and I guess you also have to take a step back and say, well, it's the beginning of the quarter, so there's a lot of inflows coming into the equity markets. Is that why the market's up today? It may be. And with non-farm payroll tomorrow, you got to be a little careful, being super exposed. My 2 cents is I'm not going to have anything substantial. No new positions really going into tomorrow, because I kind of want to be a bystander tomorrow to see if this equity market's really going to break out higher. If we're going to really break out higher following the jobs report, or do we fail? Now, the ADP jobs report came in, today, and you can see here. Let's go right over here. You can see the ADP report came in, and it is a little, better than, well, it's actually better than expected, but we got revised down. Well, no, the actual was worse, and then we got revised up the last piece of data. So, what's the non-farm payroll going to be like tomorrow, and is it really going to influence the market as much? I don't know, but I don't think I'm willing to stick my neck out and put out a trade ahead of the report. You know, the ISM came in a little bit better, and that's what really I think has kind of propelled us higher in equities. It's not so much the jobs. I think everybody's got a pretty good idea that the jobs report is going to be not great, you know, when we're losing this many jobs. But I think the ISM coming in, the PMIs coming in better than expected for the manufacturing data came in a little bit better, you know, or has really firmed up the equity market. So, you know, it's really choppy right now. I'm not sold on anything. I was, you know, I was really close to actually getting long the Aussie and just staying long the Aussie. But when, you know, it slipped back towards the 69.10 level, it got me thinking, you know, maybe this is just an anomaly with the beginning of the quarter. And so tomorrow is going to probably be the day where, you know, we'll get confirmation of one way or the other. It's going to be a confirmation of, hey, it's risk on, and we're really going to have to just, you know, pedal to the metal, be long Aussies, be long Canadian dollars, you know, even be long the euro to a certain extent. Or the flip side will be, you know, did we get a false break, and do we break the other direction and we get some dollar strength? Now, the dollar strength is going to come, in my opinion, with equity markets reversing. So right now, that's not the case, right? Right now, I mean, you look at equities, we're at the overnight, we're at the most recent highs. You know, you can see we're right at the highs here from just a couple hours ago. So the equity markets continue to hold up, and that should keep the dollar pressured. It should keep the dollar, you know, the pressure on the dollar, and not let the dollar, you know, get too far away from us. Now, take a look at the Nasdaq. The Nasdaq is just ripping, and which is surprising, you know, when you think about like the Facebooks of the world. You know, you got Google, you got Facebook, you got Amazon, all higher, and you know, you've got all this ad revenue that's being taken from Facebook. Yet Facebook is still just screaming. It's pretty crazy. It's pretty crazy how that's happening. But some of the internals are bad when you're talking about equities as well, because you got some of the banks that are down, and you got some of the transports that are down. So you know, you got the Nasdaq, you got the S&P, but the Dow is, you know, lackluster. I mean, we're trying to break higher, but it's, you know, not really following through. So again, really choppy conditions, and very, I wish I was more sure about the direction I should be trading right now, and I'm not. And so therefore, when I'm, you know, questioning everything, it's kind of keeping me sidelined and keeping me trading, you know, smaller than normal. So a couple questions that have come in. Nissim said, WTI, when to shoot it. Well, I missed it earlier, and I'm a little irritated myself for missing this crude. I know I talked about it before. And by the way, inventories came out, and it was a big draw, which, you know, shows us that the recovery is on track, if you will. I think, you know, if we rally back to 39.25, maybe you take a shot at it. You know, I think maybe that's possible. Venkat just asked about the Nasdaq, 10,300 all-time highs. Yeah, I mean, the Nasdaq is just continuing to scream. I mean, I don't know what to make of it, other than I wouldn't want to be short, right? I just wouldn't want to be short that. So Rush asked, nice entry point for push of 1,800 for gold. You know, gold. Let's take a look at gold. Hold on one second. Where is it? There we go. So, I mean, gold's at, I guess gold's pretty much key. If you think, you know, if you think that gold's going higher, this is the place you want to be long. And I guess the stop is below 1760, right? If really that's how you feel, you don't want us to break today's lows. But if we do break today's lows, I'm assuming we're going back to 1700 before we go to 1800, right? So, you know, today the day you buy this dip. And again, this is ahead of non-farm payrolls tomorrow. So, you know, that's a big risk for gold. Didier asked, TVIX, will it be delisted or only on some brokers? You know, I don't know. That's going to have to be your broker question as far as TVIX. You know, I don't think that. I think some brokers might limit you to trading it, but I don't think they're removing TVIX, right? That's volatility. I mean, it's like the 4 or what is it, 2 times short. I mean, it's yeah, I think it consistently goes down all the time. It's volatility. So until you see the VIX actually spike, you know, then that's, you know, the TVIX is, you know, in the toilet. But yeah, I would be thinking that your broker, depending on where you're at. I know you're not in the United States, Didier. I know you're. I think you're in Thailand. If I'm remember correctly, yes. Okay, then it's going to depend on your broker. I would contact your broker and ask them. I have no idea. Last question comes from Nissim, asked about silver. Silver, like gold, you know, well, actually, you know what? It's not like gold. This would concern me about being long silver. See how we didn't break? This is I was expecting a break above this trend line so we could test. This is a multi-year trend line, by the way. You know, that big channel resistance that comes in at 19 and a quarter. So what I was thinking is, you know, if we broke this resistance here, we should surge and see that channel big time. That's big time resistance, channel resistance. We didn't. So now silver is back testing, you know, the breakout point. I think like gold, the bulls need to, you know, put together their argument and start buying up both gold and silver here. But buying gold and silver ahead of non-farm payroll, you're obviously taking a pretty big risk, because you're going to see volatility tomorrow following the jobs report in both gold and silver. So, but yeah, I mean, this should be support somewhere around here. I wouldn't be bearish unless we broke this trend line right here. This is the trend line that if I was like a silver bear and I was just like, oh man, it's going to hell in a handbasket, I don't think I'd be bearish until down here. And then once, because then you would mark this up as a double top, false breakout, you know, reversal, so on and so forth. But yeah, it's hard for me to be bearish at this moment, but I think that the failure should probably have the attention of bulls near term. All right, guys. Well, you know, today, like I said, it's really choppy out there, and you just have to be very careful. I want to be convinced that the Aussie's going higher. I mean, when you take and this is the one last thing I should really talk about here. When you look at the Aussie, and let's just look at the longer term of Aussie. Okay, this has been a big V-shaped recovery. The propensity for the Aussie to move higher seems the bigger risk right now, right? For the Aussie to really break out and break above 71 cents eventually. Because we've had this big, huge rally and we've had this tight consolidation. Are we going to do it? I think the question is more of a equity market question, right? Is the S&P going to continue higher from here? And I believe if the S&P continues higher from here, and the Nasdaq, and we, you know, I mean, you got the Nasdaq. You know, how about if the Nasdaq rallies another 5%? How about if the S&P from here, you know, rallies to 3,400, you know, going into the second quarter or third quarter of this year, then the Aussie should really firm up. But what is concerning me right at this very second is the Aussie's failure to capitalize on this breakout, right? Like we were breaking out, everything was looking good. And I mean, I guess while we're above 69 cents, it's bullish. But, you know, if I was long, poorly positioned long, meaning I like bought it today, I would be a little concerned. I'd be like, why aren't we breaking out? S&P is breaking out, you know, Nasdaq's going higher. Why isn't the Aussie going higher? And that would be the big concern to me right now. Dom says, and it doesn't look like it got smacked very shortly after the break. Yeah, I mean, after it broke out, it just got smacked down. And, you know, like I said, that would be a little, oh, shoot. U.S. Readies global sanctions on China. That just happened. Wow. Okay. This is a headline, and stocks are getting hit here. Why is the Aussie? I thought that would go down. Okay. I short some Aussie, and I just covered it. I made a little bit, but man, I would think that the Aussie would really get slammed on that, right? It didn't. Equities, or they kind of slid, but man. Okay, U.S. Readies global sanctions on China over Xinjiang abuses over the, you know, this is all, you know, obviously Hong Kong. So that's happening right now as we speak. So just watch the Aussie, because if the Aussie slips below 69 cents, that's going to be pretty bearish, right? So, and it's holding up pretty well. I don't get why it's holding up so well. Maybe traders are like, oh, it's not that bad. I don't know. I don't get it. Oh, Simon said that's not Hong Kong. It's the child labor in camps, I think. Got it. Okay. But still, that's new. Wait, hold on. This also just came out. China's on track to exceed WTO corn quotas after recent orders. Huh, I don't know. But the Aussie, I think you have to be really careful if the Aussie slips below 69 cents, because then we've got a false breakout, right? All right, guys, remember, if you're not listening to this live, you're listening to it after the fact. And I just made a couple pips on the Aussie, nothing big, but I closed it out already. But if you're listening to this after the fact, that means you're not a ForexAnalytix subscriber. So for those of you that are not, try us out. It's only $1 for 10 days. For those of you guys and gals that are, thank you so much for your support, and we appreciate each and every one of you. I'll see you tomorrow on the Face webinar. I'll see the rest of you in the chat room. All right, talk to you later.